morning, everyone, and welcome back to Morning Markets on Thursday, the 14th of May. A couple of things that we've been discussing this morning that I thought I'd share with you. The first of which builds on the commentary that we used yesterday, primarily around what we'd been hearing from a number of Federal Reserve Board members, where they seem to be talking about a longer recovery phase for the economy in the US post-COVID-19. We heard from the chair of the Federal Reserve Board last evening, Jerome Powell, and again, he was indicating a very similar message, and I suppose at times really highlighting the challenges that the economy faces in the recovery from COVID-19, and in particular the lockdowns that have been experienced. He stressed a number of factors, I think a couple of those to highlight. One, the Fed stands ready to provide further support to the economy as and when it is required. Secondly, he discussed, I think for the first time, or one of the first times, the longer term or the potential longer term implications, and the fact that unemployment could remain at stubbornly high levels for maybe a longer period of time than maybe had initially been expected. And secondly, just really highlighting the concern that whilst at the moment what we do have is concerns around liquidity, and those have generally been abated, that the longer it takes the economy to recover, that could morph into more of a solvency issue, in particular for small and medium-sized businesses. So that's something that does change the tone, I think, of what the Fed have been discussing. I think finally, and whilst he did acknowledge, as I've said, the ability of the Fed to provide monetary support, he was really clear that there is a need for potentially for more fiscal support for the economy, and that is the behest of the Treasury, the US government, etc., as it is in other economies such as the UK and in Europe. So that, I think, is really an interesting dynamic. And why is that interesting? Because we've seen in recent days the Democratic Party in the US put forward a further $3 trillion stimulus bill. Clearly, the Republicans aren't moving that forward at this point in time, but it'll be interesting to see how that evolves. Why do I say that? It's a presidential election year in the US, and the economy is usually one of those factors that's very important for the re-election of the incumbent president. So it's something for us to observe and monitor over the coming months as to if further stimulus and fiscal stimulus comes from the Congress and the US administration. So that's something that I think really merits watching and attention. The other thing, obviously, from that, it did damage sentiment in terms of market performance yesterday. So we did see the majority of US indices falling between 1.5% and 2%. And the more sensitive Russell 2000 to, and when I say sensitive, I mean to the broader economy, in particular to small and mid-cap companies, fared slightly worse, falling about 3.5% to 3.8% over the course of the day. As one would expect in that sort of equity environment, both in the US and Europe, the UK, etc., that did feed into the Asian performance overnight, where we've seen weaker markets in Asia. In bond markets, I think it's interesting to observe that we didn't just see bond yields moving lower as much as might have been expected in that environment. And that probably speaks to just what we've got at the background of where the Fed and other central banks are intervening in both sovereign and corporate bond markets to support those. So that was an interesting thing just to continue to observe. Turning then forward, I think the other thing just to touch on today is really the benefits of diversification in a portfolio. Just given the backdrop that we have, as we all know, we've seen equity markets rally quite materially from their lows over the past number of weeks, from that low on the 23rd of March. So it's unsurprising that we're seeing some consolidation and reappraisal at this point in time. That's something that we've touched on. It's natural in this type of market environment. So I would caution that not to be surprised by it. but again, just focus on the role that diversification and asset class and manager diversification can play in the construction of a portfolio at this point in time. We will have the US employment data this afternoon. Again, that will be something that will be focused upon. And then I think most interestingly, after the US closes tonight, we will get some economic data from China that relates to April, primarily around industrial production and fixed asset investment, which will give us a further indication as to how the Chinese economy is recovering or not, as the case may be, as we go through this phase of reopening economies post the lockdowns of COVID-19. That's it for today. Join me again tomorrow. Thank you very much.